Good morning, everyone. Happy Tuesday. We were doing some early London trading, so welcome to Metal Markets. I'm Marcus D. I've been trading for almost 20 years. I am an algorithmic trader. I still do some manual trades here and there, but this one is a bot trade, and we're running a long copper trade, trying to get it up to the average session range high of London, which is sitting at 644.40. I also did a crude oil short. That was more the break of this 90 level. That was the gamma flip yesterday, but today it is just a moderate level. They got broken pretty early, and then I ran it down to the gamma flip. Now they're kind of fighting there, so we'll see what they want to do. Obviously, there's been some talk about the deal potentially happening, so that's always troublesome. If they decide that the deal is definitely done, then I would expect this gamma flip not to hold, and we could see an acceleration through that. So I'm just watching this copper trade as it's trying to creep up over this developing value. Now, if I show you how the value behaved all morning since the London Open, this is a 15-minute time frame. So it's been slowly creeping higher. They had a moment where they wanted to test it below this broken gamma wall. Didn't quite happen, and they very quickly pulled it back over the 640 gamma wall. So we are coming to the time of the day when it's a little bit dangerous to hold these directional moves because the pullbacks become imminent the closer you get to COMEX. And at this point, I am actually thinking of taking this off myself manually because I'm not sure how much more momentum we have left. Volume is also dropping off. So this would be more of a buffer trade than anything else. But let's give it another maybe 10 minutes or so to see whether they want to smash it back up. If crude oil continues to show strength, that is not going to be good for this position. And we'll see how much the correlation is today. So let me just have a little look before we see who's in chat. So the correlation, let's see, just need to change a couple things here. Yeah, so the correlation is fairly negative. It's minus 0.87 on a 15-minute time frame. Sort of hanging around 0 on a 5-minute. So they're not that correlated, but they're correlated enough to potentially put a wrench in the works if crude oil decides to make a big move to the upside. So I'm gonna try and keep an eye on financial juice. Like right now, I'm not seeing anything too concerning. I'm just gonna move financial juice to this screen. And yeah, the tape is looking alright, but this cumulative volume delta is still holding, but they're definitely finding some trouble going higher from this developing value high. So I don't know. We'll see. Let's give it a chance. But yeah, we're very far away from Asia high. Stuttering today. So that's a good one, but again, the entry was based off of the test and a reclaim of the gamma wall. So, you know, it's a little bit high. But yeah, we'll see. Let's have a look at who's in chat so I can say hi to everyone. Crypto Trades is here. Good morning. 7, Hebrew 11 Shark. Back to the old school. Good morning. Earring, Andrea, DJ Runs, Nanka. Puneet is here. Hey man. Yeah, good to see you posting in the portal. Yeah, See what the day brings. Kelvin is here, Rob, Initial Maverick, Sandy, Sonny, Joe. Yeah, good morning, Joe. Danica, oh my god. Good to see you here. Bright and early. Adam, KJ, Trading Nickels. So yeah, some usual suspects here. Very nice to see. Right. Let's have a look at this gold chart for a second. Gold is in rollover, so the roll is, sorry, not gold. Crude oil is in rollover. Tighter ranges, naturally. So why do I say that? It's because we have 7 days until crude oil rolls. Crude oil is one of those products, and I know it's a metal show, but, you know, obviously I trade quite a bit of crude oil as well. So crude oil is one of those products that only gets you about, I don't know, about 3 weeks of good price action before the rollover starts to set in again. So it's a little annoying. But you can still find some good range trades. It's just not very good for momentum trading. And gold was a bit quiet. So yesterday I was talking to Hoop, and we both were looking at like very large time frames, and he noticed that there was a yearly VWAP that gold touched and then bounced off of it. So I'm just gonna try finding my gold chart. There it is. And yeah, I mean, very range bound, very quiet Asia. Yeah, I don't know how much movement we can actually expect from gold. Yesterday was quite a pathetic COMEX session. I mean, eventually it kind of got going, but London was the one that had most amount of movement. So, you know, it's been tricky, gold. But yeah, that large time frame with the yearly VWAP is where it bounced. So let's have a look at the daily chart. What does this look like on the daily? Yesterday we ended up with some excess. Now it's a pin bar. Pin bars on gold are generally okay for reversals. For some other products like crude oil, whenever I see a pin bar, I actually expect it to be broken, completely retraced, and then they kind of smash through the low and then do yet another reversal, almost kind of like a full range, but you have to have it on a very large time frame. So yeah, I find them a little bit unreliable on crude, but on gold likes the pin bars, has a potential for reversal. You can see that happening in this area as well. So definitely a decision point here. It's not like the most massive gamma level, but we do have a moderate put support at 43.50, and for now that has been supportive. Is that going to hold into COMEX? Remains to be seen. And if it does, that could open up a larger move for copper to actually do whatever it's going to do. Right now it's struggling. Delta just came off. So I may want to pull that off for some profits here. What does a 5-minute time frame look like? Let's see. Yes, it's a very strong reversal here. This is a little candle timer. Let's see what the bid and ask are doing as well. That can be a decent indicator. Are they going to push it, or is this delta falling off going to cause trouble? But overall, delta is generally positive since the start of London. Do we have music? What's going on? We do have music. It's just quiet. What's everybody else trading today? Ooh, Dan Trader. Hello. Hello, hello. Maybe I should call the show Heavy Metal. I did think about it. I'll be honest. I did think about it. But, you know, heavy metal in the morning, like I would then have to do some heavy metal music, right? And I know I have like my hard rock song playing usually at the end of the streams, but I don't know, because most of you are in the States, right? So do you really want to have banging heavy metal in the morning? Might be a bit tricky, right? Can we creep up over the developing value high? That is the question here. Yeah, they're definitely finding some sellers here. We'll know soon. Let's move back to the 30-minute time frame. Yeah, this candle timer needs a tick, and because copper is a little bit slower, it takes one tick for it to start happening. This is just the bid and ask spread moving, so there's no actual ticks happening just yet. Yeah, so the setup that I was running on crude oil, in case you want to know, was a potential to effectively break further below the 90 towards this gamma flip level. If that didn't happen, and if they just decided to reclaim the 90 level, I would have changed my mind. But usually crude oil gets a little directional for the London Open. However, we still had the head fake, right? You can see the head fake, so they went higher. But they didn't manage to make any new higher highs. And then I saw on tape, like, they just immediately started running it down. So I figured, it's worth a try. Then we had a retest of the initial balance low. So that didn't really bring any sort of a reversal. Now we're sitting in a normal variation type day, because the initial balance extended pretty nicely. And now they're just literally glued to the gamma flip. Anything can happen here. But at the moment, gamma flip is where it's at. Again, gold, middle of nowhere. Literally middle of Asia. So Asia low, Asia high. I suppose if we crawl up to the Asia high and then we do a little stop run in reverse, that could be a setup for the next trade. So I'll keep an eye on that. I'll definitely keep an eye on that. But gold has been having trouble holding the longs. So that's maybe a sign that this downtrend we've been seeing is here to stay. I don't know. Remains to be seen. Here's a good question. Do any of my close friends trade? No, not really. Like, first of all, I don't have that many friends. So what do they do? So one of them is a real estate agent. She used to be a musician. Another one is working in kind of the U.S. Department of Defense. She tried trading. That was Maria. She didn't really like it. She didn't like the risk, but she did try many moons ago when I was getting involved. Obviously, I was like, hey, you've got to learn this. But it just, she just didn't gel with it. My real estate friend, she does do longer term investing, but she's got a company that does it for her, so she doesn't really do it herself. Our best man is kind of a long-term investor, but he does it himself. So I suppose that's kind of trading, although very different. None of them do this. So all of my close friends that trade are the close friends that I have through trading. So, for example, Hogue and Coach Hoop are two of my very, very close friends. So do they trade? Yes, but I didn't meet them outside, in the wild. I met them through the industry. So I do have friends that trade, but not the ones that come from other walks of life, if that makes sense. I think trading is a bit of a weird thing, and you have to be a little bit nutty to get involved with it so seriously. And most people don't understand it, right? Most people think that it's just gambling and that it's just like, you clicking buttons. They don't understand that there is like a structure to it, that there is a, statistical probability that comes along with every setup. But that also implies that you have to have quite a bit of knowledge. And I think that is the biggest challenge, the fact that it's so difficult. It's like trying to become a surgeon or something, or an Olympic medalist. It requires all of your time. It requires unusual emotional resilience, and it requires a hell of a lot of effort and emotional investment as well. So if you're somebody who's uncomfortable with risk and you would rather get, the paycheck coming in every single month without you thinking, that appeals more to most people than the potential to make larger sums of money, because security is a big drug, right? Being secure with the money that's coming in every month, that is something that a lot of people really enjoy. I don't. I was never in a situation where it was like a 9 to 5. I hated it. I mean, not never. I did find myself maybe a couple of times in my life, but it was always just to gain some extra skills or something, and then I immediately just, ran away from it. I was a session musician for a very long time. So that's a very insecure job, because, you get a gig for like 2-3 months, then you're off like doing a lot of travel, and then that's it. So you don't really know where your next paycheck is coming from. Who's going to hire you? Is there going to be any gigs? And it's just this like uncertainty that makes people very uncomfortable. And trading is exactly the same way, because nothing is guaranteed. This is one of the only jobs where you can do a full, never mind 9 to 5, you can do 12 hours a day and still walk away with a loss. That's not a very good thing for most. So you have to have this belief in yourself that it's okay for you to do this, and that you are capable enough in order to, trust yourself not to go on tilt. And I think that the, invention of online prop firms the way they are today, with like multiple resets and, having to try many times again, I think that's bred a lot of mistrust in some people's skills, because you don't trust yourself not to go on tilt. I come from the old school prop where you didn't have an option. There was only one account, and quite frankly, if you fuck that up, you're done. Like, you're literally done, and they kick you out. There's no like, oh, maybe you should try again. I mean, there was a prop firm where if you did mess up the original amount assigned to you, you could technically buy your way into it, but you would have to shell out anywhere between 15 to like 30 grand of collateral before they would get you through the door. And at that point, you might as well just, use that money and go and do your own trading. But we again come to the point of trust. Do you trust yourself to be emotionally stable enough to be able to manage money? It's a very unusual skill. And I think that's why most people don't really gravitate towards it. They want something that is just secure, something that is just going to bring in money. And, a lot of people have families as well. I opted out of having kids. I have dogs. But, in the grand scheme of things, that's less of a commitment than having like a couple of kids where you have to pay for their college and you have to make sure that the food is on the table every month. It's a, it's a big sort of risk to just step outside of all of that, chuck away the secure money that you had in your other day job, and just go, I'm going to do this. But I'm somebody who's always done impossible things, right? When I wanted to be a session musician, my mom actually was very against it. And she said, it's not a secure job. You should go and do like, you know, be an economist and then find a job and then maybe you can do music on the side. I was very against that, and we had horrible, horrible arguments over it when I was a kid. But, you know, my mom has probably gotten used to me doing crazy stuff by now. But it took a long time. You know, she did think that I was insane for some of my decisions for a long, long time. She was like, why are you doing that? That's just insane. Well, don't do that. You're going to ruin yourself. And I'm like, you know, we'll see. And again, if you don't have that sort of, you know, fuck you to everybody else around you, I'm going to do whatever I want to do. Getting into trading is a very difficult thing. So unfortunately, because of that, I just don't have many friends that I've met outside of the industry who are day traders. I literally don't know anybody who's a day trader, but there are a couple of long-term investors. Yeah, it's an odd job for sure. Sandy says, so she did that gig with being future economist too. Yeah. So because Sandy, you moved out, so you probably weren't privy to some of our arguments. But basically, when I was deciding, actually it was when I was going to like secondary school, so I was about to get into the music school, and she was like, don't do that, you know, you need to get to like a more general education, you need to be, you know, in a secure position. And I was like, no, I want to be a musician. And I stuck to my guns. And it was the right call at that time. But hey, my mom knew something, right? Because here I am being a day trader. And it's like, what? How did this happen, right? And in fact, when I said to her that I was going to be a trader, and in 2007, I said, hey, Mom, you know, so anyways, I'm studying to be a trader. She burst out laughing. She was like, you, a trader? Oh, my God. And, you know, she had a point. Because I sucked at math, and, you know, it's not that I was bad at math, it's just that it wasn't interesting to me. Like the whole like numbers with no purpose. And, you know, later in life I discovered I liked the security of a lot of cash. And I was always good with cash. Like my sister and Chad can attest to that. Even when I was just getting like an allowance. So here's a funny story. We lived in former Yugoslavia, and during the 90s, when I was a teenager, we had like some of the worst cases of hyperinflation that any country has seen. I know that, was it Nigeria that had hyperinflation? Well, we're like right up there, and this is not a very well-known fact. So what used to happen, and we have the dinars, that's the currency of that country. So I used to... before school, there were these like dodgy guys that were selling you like currencies on the street. it was a lovely time. So they were selling it to anyone. Like you didn't have to have ID or anything like that. You would just come up to a guy and he'll be going, currencies. Like as if he's selling drugs. Like that was basically the gist of it. Just a dude on the corner and going, currencies. So you would come up to him, and I used to exchange the dinars that I would get for my allowance into Deutschmarks. And by the afternoon, the hyperinflation would like massively go up, and it would turn the you know, small amount of dinars that I had into a lot of dinars, because obviously the Deutschmark stayed stable whilst the dinar went insane. And that's how I used to always like generate more cash. So I suppose I was a trader of sorts even then, because I understood how that part worked very well. And, you know, I couldn't have been more than like 12, 13, 14, you know. It's like, and it's a little bit crazy to think about it from this point of view, that I was kind of doing trading even then. So that was my like little trick to generate a whole bunch of cash. So that's my story for you today. how Dee became a trader. But yeah, my mom was not in favor of me going into music. She was very skeptical about me going to day trading. But eventually we, you know, it all worked out, right? So it's all good. Oh, God. All right, we have some more commitment here. Delta's rising again. The correlation seems to have broken down completely at this point, so it's like 0. And that's kind of working in my favor here. So let's see if we can push it just a little bit more. So we can fill this range up to 644.40, and then I'll be done, right? Because that is the average session range high for the London session. So if it fills that, that's my ultimate target, and there is no more. I'm just going to make sure I'm not going over the consistency rules here. All right, we're good. We're good. So I'll probably be taking a little bit of a payout from one of my Tradeifys, because that one's now coming up to being under the 20% consistency. I do have one that is growth, so that one kind of requires less, but I want to pad it a little bit more before I start taking money out of it. All right, so gamma flip on crude oil working. We have VWAP that is sitting right under the 90 level. That remains an area to look out for any kind of selling. And let's have a look at, let's prepare crude oil for the next session. So where is this going to be opening in relation to NYMEX value area? So NYMEX value is sitting right under 91. So that's all the way up here. And I suppose, you know, I'm just looking, they keep kind of smashing. I need to take off this copper because they keep kind of smashing big positions, then Delta screws up all the way to the downside, and that's becoming a little dangerous. So I'm going to kill all those positions and book my profits. I mean, this is what, like about 1.2, 1.3 R, so it's not the ultimate target. I'm just worried that, you know, if I leave it alone, we're just taking its sorry time hanging around these developing value areas. So I'm just going to book that. There we go. Okay. So at the moment across the 500s, yeah, so 2 apexes and 3 Tradeifys, we're sitting at about 7.2k on the day. Not a terrible start to the Tuesday. Now, obviously, because this is an aggregated view, right? So I'm always looking at potential loss of about 4.5k or so, and across the board. And then when I'm doing well on the day, we're looking at anywhere between 6.5 all the way up to 11k, and that's including consistency rule. You know, I could kind of push it more, but you have to be mindful that some of these companies now have consistency in the funded, and the only two that don't, that I can trade with because they allow bots, would be Trade Day and Top Step, right? So they don't have consistency in funded. And Trade Day recently brought out Fast Pass. So I do have some of those as well, but they're going to take a little bit of time because they have consistency in the evals, but no consistency in the funded. So it's going to take a little bit of time just to get there. Is it appropriate to short MGC? The previous small highs have repeatedly failed to break through. So be careful with that, because at the moment we're in a bit of a dodgy time of day in the middle of nowhere. So you don't have, so here's gold, right? You don't have any strong options levels here. Now, what my Blahtech GL indicator does, we actually, I can't do this on a trading view indicator. This is only something that can be done on Ninja. So I poll it every 30 minutes or so. So you effectively get intraday gamma flows of the biggest levels on the day. So right now, there's nothing here, right? So you don't have any strong levels. The short will be against the value sentiment, which is upside, and here was the value low for London. The value low acted as support, and now we're kind of heading through the Asia range. Asia high would be my sort of first area where I would consider shorts, and that's quite a ways away. Okay, so that is, you have to use levels. You know, the longer that I trade, the more I just turn towards levels rather than any sort of, you know, oh, just price action. Because price action has to be matched with the level. You can't just have, oh, well, you know, it's failing to make higher highs, I need to short it. The question you should be asking yourself is, what do I have at this level, at this price point, that I can use as a high probability hypothesis that we're going to do a short? If you don't have that level, all you're doing is clicking buttons, okay? So levels for me here do not exist. Asia high up at 43.76, that would be like the first area where I would consider shorts. This is middle of nowhere. It can go, like the probabilities here are equally distributed. It's a coin flip, in other words, right? It could go either way from here. Furthermore, the time of day that we're coming into is very tricky for any setups. So again, it's a coin flip for the time of day. If you find that, you know, you might want to do a middle of nowhere setup, I would prefer that we're not hanging above the developing value, because the developing value being slightly lower tells me that the price action is still relatively strong. It's not that it can't go short, it absolutely could, but the question is, how repeatable is that going to be for you going forward? You have to have something that is repeatable. If you don't know how to replicate your success that you've seen as a result of catching something somewhere just on a whim, that introduces problems, because then you have confidence that you caught it because you read the price action right, but what is the level? So I prefer to teach people by having a level and looking at the price action. So whether that level is the exhaustion of the average range, value area outer edge, one of the strong gamma levels, VWAP, like anything that will basically give you that anchor that this is what should be happening here. And you will be surprised how much it just clarifies everything and gets rid of the cobwebs and makes your analysis and diagnosis of the chart much, much cleaner and clearer, right? So try to work on that rather than going, well, it's failing to make higher highs, let's go short. That's not what professional traders do, right? We all work off of levels. Level first, price action second, and for me it would actually be time of day, level, price action. That's like the sequence. You can put that in a flow chart and put it on your wall to stare at every single day until it's like second nature. So for me, the gold is just in the middle of nowhere situation. Maybe if you have like a developing value situation and then it starts to create like a 2-minute reversal or something, then you have a range trade on your hands. This is nothing. I can't even define what this is, right? It's outside of the developing value, middle of Asia, no strong levels from the options chain, no value areas to you know, fall back on. There's no statistical averages, exhaustions. So it's like, yeah, it could go anywhere. It could go short, it could go long. Are we in a downtrend on large time frames? Well, yeah, but you know, that's not typically enough. But hey, it's your money. If you think a short is worth it, and you're maybe reading a, you know, intraday supply, that the only thing that you could possibly anchor yourself to is that there is a London supply here. It's just that in my experience, London highs tend to get hunted as we get closer to COMEX. And COMEX is going to be opening in about 15 minutes or so. And then you'll have a clearer idea of what's happening. The best reversals for me on gold will be after 9 a.m. Central and 10 a.m. Eastern, because there's something mechanistically that happens at that time of day. There's actually two things. One is the Forex option expiry. So you have Australian dollar that has a huge connection to gold. So whenever you have this Forex option, NY cut as it's known, expiring, you also have the price fixing for gold at the same time. So you have like this double whammy of volume just suddenly coming through and volatility increasing. And that typically causes either a reversal or breakout that has a high probability attached to it. Anything in between is a little bit sketchy on gold. The only setup that I could possibly see on anything would be crude oil when it extends the initial balance quite significantly for this time period, and then as we're getting closer to NYMEX, I like to fade that, and I actually have a bot that does it for me. Now I had to make, you saw that bot make a trade last week, but I don't think that a 5-minute time frame is good enough, because it was like too quick to pull back, and then it kind of entered when it was in the middle of the range. So I had to do a little bit of tweaking on there. So now I have another condition where it double checks whether we are still away from the initial balance before it enters the fade. And I also put it to be on a 2-minute. I reran the back test. It is still valid. Everything is still fine. So that's going to be a little tweak going forward. And actually, speaking of that bot, let me just see if that's actually switched on. But we don't have that condition today, right? You could argue that that condition was already here, but the volume was not quite strong enough. So the bot didn't even deem that as a decent reversal. Because of rollover as well. So rollover is a bit tricky with volume. Why? Because you get split volume between the new contract and the old contract, and then everything gets a bit screwy. So crude oil has been very quiet for NYMEX. Most of the moves have been happening during Asia and London, which is why I've been trading it earlier. So you have to go where the price action is. And I'm expecting another blah NYMEX session. The meh NYMEX session. The Blimex, yeah. Shane says, do you think this focus on scaling and intraday trading instead of swing trading has resulted in higher fail rates due to overtrading and over-leveraging? Oh, for sure, 100%. Yeah. Swing trading is arguably easier. Not easy, because you still have to be very patient. You know, for swing trades, you're not going to get your setup every day. You're going to get a setup maybe every 2 weeks, once a week, you know. How many people out there have the patience to actually sit and wait for one setup on a daily chart or 4-hour time frame, then enter and not overmanage when they see a bit of profit? Not many, right? People want to click buttons. Everybody's turned into overtrader supreme. Everybody wants to be a scalper, and yet, in my opinion, scalping should be reserved for people who are, again, even more unusual as individuals. You know, think somebody like Rips or Nick for a Tick. I'm just going to let Crity out because he hates being in here while I'm talking into the camera, because he thinks it's weird and then he wants to get away from me. So I'll be back in 3 seconds. So yeah, the puppy cam, and now we have Bernard who has joined us, and Crity decided to leave us. So we have a switcheroo on the dog presence here, dog attendance. Right now we have Bon, we have Rimmer Bear under the desk, we have Matty Boy up on the sofa. He's a black and tan boy, so I don't know whether you can see him. And then we have our biggest boy, also black and tan, Bernard, who is just walking around and going on his cool mat because it's getting a bit toasty in here. So yeah, swing trading easier, but at the same time, not too many futures prop firms allow swing trading. In fact, do any of them? I don't think so. Would it be a good choice to have swing trading with the type of leverage that prop firms offer? I would also say no. You would have to trade with like really small size if you would want the swing position to survive. Think of it this way. Gold right now has an average daily range of 769 ticks. Even on 1 micro, that would be you requiring the average daily range stop size equivalent to desensitize the position to the intraday whipsaws of about 700, 800 ticks. So immediately you would be risking 700 to 800. So unless they come up with like bigger accounts for swing trading, I just don't think that that's very viable. You know, the overnight margins also are ludicrously high. So for any prop firm to be able to hold positions through the close, they would need to open up the purse strings and to really allow that leverage to come through during the maintenance period, right? So that's another issue. Ton of leverage required for overnight margins. It's just how it is. All right, so if we get back to this 90 level on crude oil, maybe there's a short there. We're still just about early enough to be able to do something with crude oil, but it wouldn't be one of my super high probability setups. It would be looking for maybe this developing value to crawl higher and then to reject both VWAP and the 90 level. Something to consider. Now on Tradeify and on Apex, I cannot do silver because they only have massive silver. Trade Day does have micro silver, but again, that's an eval. So, do you want to trade evals? Probably not. Let's see what happens. But yeah, it will be a little bit of a catching things from a moderately strong gamma level, but not really something that you can code up because it's a little tricky. And then is there anything else that I can do? Let me see. Yeah, if it carries on higher, maybe a test of settlement here. Actually, let me check whether that is settlement, because oh, there it is. So I have the settlement that I can change the time of on our VWAP. Yeah, so that is the settlement. It's 7:30 my time is when crude oil settles. So maybe that's something. It would be high up enough to run a short trade. And then copper, if it exceeds the average ranges, maybe there's another sell or something from 645. But I'm not sure that'll be on the stream because I'm probably going to be finishing by then. So yeah, we'll see. All right, let's have a look at chat. Yes, Sonari says, I started trading in 2016, had to unlearn a lot of bad info. Yeah, that's a big problem too. Because you have a lot of YouTubers that make it look so easy, right? Now, it's not easy. It's definitely not easy. It's the hardest thing you will ever do. Do I look at the opening print as a relevant trade location? So, Danica, no, I don't look at the opening print. Apart from my open sentiment, I don't really look at like the opening range or anything like that. Because again, you have these head fakes on our products, on my products. I know that you trade a lot of equities, so that would probably be more relevant for equities than it would be for crude oil and gold at this time of day. But DAX, you know, we can have a look at DAX actually. We can look at DAX. Here we go. Let's change that. And, ooh, hold on. I'm going to have to arm wrestle some schedules here. Okay, that looks all right. And the DR also looks all right. Okay. So I don't have to do anything. Well, let me just make this a bit prettier. Okay, so here's DAX. Actually, let's get rid of this copper, because right now I'm not interested in copper, so we can analyze DAX. DAX also has head fakes, right? So it likes to... Yeah, okay, so I can see that there was a potential setup. Let me put in the multi-display here so you'll see what I'm talking about. All right, so as we start trading, now DAX doesn't really trade fully overnight. It sort of starts trading at whatever this is. So it's not like a full-on Asia session. Yeah, it starts trading for Eurex effectively. And then you see a little swipe below yesterday's New York session low. And then it reverses and goes higher. But it still has this very jumpy 30 minutes that's effectively a head fake. So it goes the wrong way. But the setup here would be the swipe of the New York session low and then a reversal and then just hope for the best, right? Right now, I would be probably looking at this gamma flip at 24,700 to give me either some kind of support and then maybe to keep going higher. But we open inside value, right? So apart from that open sentiment, in the beginning, I would be looking at entirely different references for crude oil and gold and copper. Whereas equities, yeah, you can derive more information from the first sort of 5 minutes of trading. I still don't like trading immediately, so I would typically, even on DAX, if I want to do something during the initial balance, I typically want to see a takeout of either the previous day high, if it's somewhere there, and then that stop run and reverse, and then a push in the opposite direction. But sadly, those sorts of setups don't really apply on my products because they're a lot more jumpy and it just doesn't work. Like statistically, it's not a viable setup. Actually, the only time a 15-minute orb works on crude oil is when the volatility index for crude oil CVOL falls down, which is on TradingView you can see it as OVX. When that falls down to below sort of 32, that's when the initial balance type setups for NYMEX based on the 15-minute orbs start working really well. But you have to cut them off either at the end of the initial balance or maybe give it another 30 minutes. So literally you're just going to be trading it for a push and then bailing, and that's your trade done. But when it's moving this much, you know, crude oil, this is now a very normal range in crude oil of 375 ticks on average. That doesn't work as well because there's too much wiggling, and you know, statistically it's just there's no stop loss that you can use that's going to survive that sort of a position. And then you're looking at the frequency of occurrence of a setup of about 20 to 30%. I personally can't trade with that. I have to have setups that have at least, like, at the bare minimum 60% to be comfortable with them. So when they do appear, they work. But they also work 60% of the time, and they give you the full target or somewhere near, right? So something happens and you can actually take advantage of it. Anything else that, first of all, is a low frequency of occurrence, doesn't even turn up like once a week, let alone, you know, several times per day, I exclude those. I'm not interested. But there is a difference between equities and commodities for sure. All right, I can see that MGC is kind of trying to push now. All right, Daniel says, Deeyana morning, just popping in to say I love the thumbnail you got there, looking great. Thank you. Thank you. Well, interestingly, Daniel, the thumbnail that I had on Top Step Metal Markets, that wasn't really me, because this one is actually based on an image that I actually took. It was one of my headshots. And yeah, it's a little bit smoothed out and stuff, but, you know, generally it is me. Whereas the one on Top Step was fully AI generated. I never took a photo that went like that, right? Never. So, but it fooled my mom. My mom saw the photo and she's like, hey, you're looking a bit older. They made me look older as well. It's like, really? But yeah, it was a bit weird actually, because they didn't tell us they were going to do that. They just kind of sprung it on there. And I was like, that's not me. And why do I have wrinkles around my mouth? Like, I have no nasal, like, I look pretty young for my age. And yet they put me like some sort of an old hag that has, like, you know, wrinkles there, around the eyes. And I'm like, I have none of that. Like, what are you doing? Okay, maybe I have some wrinkles around the eyes, especially if I lapse on my Botox, but which is what I've done now, because this is all au naturel, right? I haven't done anything to my face for like 2 years now, so yeah. But yeah, it was a bit weird. You know, you see yourself, it is you, but it's not you, and you're like, what's happening? Can I share my chart template? Okay, so guys, I'm starting work because we literally already sent out the indicators, Ninja indicators, to the QA tester at Ninja for the vendor side. I'm in the process of starting to create little videos that will explain the functionalities of the indicator. Now, those of you who have been on the previous platform, you will know a lot of it, but there are some things that we were able to improve because this is now C# and it's not MQL5. So there are improvements on how all of the indicators are working. So we've done, you know, a lot of work over the last year and a half. And I will be sharing templates that I'm going to see if you can, like, actually download the templates so that you can, like, have the same things that I do. And that will help. However, anytime we create our indicators, we want them to work straight out of the box, rather than you having to dick around with the settings, a million settings to make it do whatever you want it to do, like 3 different sessions, like the you know, all of the lines displaying properly. With us, it's all like we made it so that it's like a little tiny spaceship, right? So if I want a multi-display, let me just switch this off. That's just like one click multi. If I just want a single display, that's also just like a one click thing, right? So now it's only displaying London. If it displays multi-sessions, again, one click, and you will now get all of them, right? You have the New York, you have, okay, Tokyo doesn't exist on DAX, but you have all 3 sessions, right? If one exists. If it doesn't exist, obviously the indicator is not going to put it. Like, for example, if you place something on a live cattle chart, it doesn't even have London, right? It's just RTH. It's just like regular trading hours. So that's what the indicator is going to put. It's, you know, you might need to change some times for the schedules. Like, for example, if I'm trading crude oil, obviously crude oil in my time zone opens at 2 a.m., not in 2:30, which is like the New York Stock Exchange open. So, you know, that would be the only thing that you will need to switch. And this display, the little panels and stuff, they are more cosmetic. If you want to make anything permanent, you will obviously have to go into indicators list and then go straight down to, let's say, Blahtech MP, and then change it to be in this area. And then that will get saved as the settings that you can then have upon the next logging into the actual Ninja. But templates themselves obviously live in templates. So here they are. And you can just save the template as whatever you want. So here we have Blahtech Comex, Blahtech DAX, NYMEX, template, which is like a default. We had one of our coders that also were trying things out on my machine, just to make sure that it kind of works as well. And yeah, so that is very easy. And then next time you want to load up a template, you will just go templates load, and you load one of them and all of it is there. So, you know, we want to make tools that work straight out of the box. And, you know, I'm super annoyed if I buy a market profile for a new platform and suddenly I'm like, oh, it doesn't have sessions. How do you put sessions? And then you lose like valuable time messing around with something that should be there already as a default, you know, or even worse, like volume profile fixed range. Oh, that was the bane of my existence. First, you don't have the resolution, like there's no initial balance or anything, and then you're like, where does it start? Oh, it starts here, let me drag it. And then you click something and you by mistake drag it or delete it, and you're like, oh no, now I have to redo it. It's so annoying. Andrea says, trading by select accounts have no consistency when funded. I know, but I like to do either lightning funded or growth. So growth is like 35%. And I actually like having a little bit of consistency. However, at the same time, I go for attempting to create P&Ls that are up to about 2.5K. So that means before I have about 14 grand in there, there's no chance that I can withdraw it. Why? Because I want to have a padded account before I start taking money out. And if you're just going for, you know, no consistency, I found that for me personally, I would start to think, oh, should I take a payout? And then there's not enough money left in there for the account to survive the next period. So that's just, you know, a personal preference. But, you know, once you're further down the line, I actually like the fact that on Lightning Funded, you get a bigger drawdown. So I'm on 100Ks. And initially, obviously, you kind of sign up and you expect the same sort of drawdown that you have in other evaluations. So I was actually pleasantly surprised that instead of 3K, you get 4K. And then the initial daily loss limit is like 2.5, which then grows to 4 grand as soon as you're over the target. To me, those are like excellent rules, man. So I really don't have a problem with it. And because you're running several accounts as well, you know, how much do you want to like extract on the day? If you only have one account, you know, I have that in my personals. I can just run the trade to infinity if I think that's the kind of day we have. But in general, it's one of those tricky bits where it's actually good to have something that will make you take profits. And for me, that's been like my old issue back in the day when I was a fully manual trader. I would see something and I'm like, yeah, this is going to run. The question was, is it going to run today? And usually the answer to that would be no. And yet I would still be holding on. Like I stopped doing that probably about 7 years ago, but that still stays there as a potential Muppet moment for me. So I don't want to be tempted to do even more stuff. All right, so crude oil is kind of turning around. Kind of turning around. Let me see what sort of stop would this require. This is the only thing I find a little bit annoying here, because it puts like the prices here, and then you always have to go into properties, and then you go into digs, and like, come on, Ninja, sorry, so hard. So that's 43 ticks. Okay. And what if because up until recently I was running crude oil on like 75 tick stops, and that called for micros. But if this was going to be like a smaller trade, one thing I don't like here is that I will be placing my stop underneath the round number, and I don't really like doing that. Yeah, so let's do MCL, because that's too big. On this one, because it was so tight and the risk was so defined, I was able to actually do a 45 tick stop or 55 tick stop. That's acceptable. 75, it's a little bit too big. Let me just grab an MCL, because I don't like touching the big one, since I do have a strategy attached to it. Let me just see if I can grab one. I can grab one from somewhere else. Just make sure that I don't have any strategies on that chart either. Okay, that deletes it. That's fine. I also don't need the bar timer either, because I have my own candle timer. Gonna remove all of that and then just load up a template. Now I hope this is not some old template. I think we're good. Here it is. Now let's choose the biggest one. Let's try it. Let's see if we can smash below this 89 level, shall we? Because you can see the full, this is why I don't like using micros to read stuff. If you look at, this is both, you know, VWAPs should be at the same spot, but the big contract hit VWAP and reverse from it. On the micro contract, it never even got there, right? So this is why the big boys are the ones who should dictate where you should get involved. And again, not the highest probability setup. This would be test of halfway back into initial balance and then a continuation. And if it only ends up banking me like, you know, a few ticks, so be it. But it's not a highest probability setup. This is like more hunting for that continuation of the downside direction based on the probability of, you know, the negotiations coming to an end and all of that good stuff. So we'll see if we can swipe a few more ticks. We do have the developing value high that also gave way to a reversal. And now we really need a retest. So what I'm looking for here is a retest of 89 and the subsequent break. Is it the best trade location? Absolutely not. However, halfway back into initial balance and a reversal is a setup that does sometimes happen if there's a possibility for, you know, some kind of a catalyst stepping in. Now, today we don't have the inventories or anything else, so, you know, headline risk is elevated, but we are in with 5 micros, and we're going to see if we can get that follow through for this pre-NYMEX hour that might shake out everything below the 89 level. And this technically would be halfway into our initial balance with the retest of VWAP and then a reversal. VWAP is not always reactive in crude oil. So again, I don't have a bot. Like anytime there's a high probability setup, I have a bot that runs that in case I'm busy or in case I'm asleep or whatever, or sick. But this one is like more of a human read of context and how things should play out. But if 89 doesn't break, we've got nothing. So it really needs to, you know, take in the information that we've already had a few tests there, and therefore any subsequent tests of the 89 gamma flip should bring us a quick follow through, and then we'll have a negative gamma stepping in, which makes everything crazier. So which is why you can extend the targets a little bit and then just see if we can add onto whatever we've created already as a profit on the day. But we need to wait for the end of the 30-minute time frame, and then you'll get that push. Because why? You have institutions that are still running algorithms where they are trying to get an average price of something, and they run those algos every 30 minutes. So if you notice that after every 30-minute close, you suddenly get this push, that will be why. It's institutional footprint. And if you don't get that, it means that they're not particularly interested in whatever level you're getting involved in. I prefer to get involved with, you know, decisions in and around institutional interests, where the volume is much easier to read and tape gets easier to read. And yeah, VWAP is definitely something that they also utilize to try and get, you know, their positions, which can be pretty massive. And it will be the commercial hedgers as well. You know, on crude oil, commercial hedgers are pretty active. I don't have anything yet on DAX until we get to 24,700, and then we'll see if there's some longs there. AK Trade says, good morning, D, checking in before Coach Paul's class. Does he still have a class? How does Tradify compare to TopStep? Well, to me, the biggest positive is I can use Ninja, because, you know, I've been using Ninja for like 8 years, and, you know, all of my workflows and everything, I'm very, very used to it. So from that perspective, I personally prefer any option where you can use the platform that you're used to. I'm getting way too old to start using new platforms, right? You don't, like, whilst you can learn some new things, generally learning a brand new platform and trying to port all of your bots that you've created over the last 8 years in one thing to another one, that's so difficult at 45, right? So I want to make sure that, you know, that I'm comfortable, and, you know, the whole trading view white label thing, I don't know what possessed people to go that route, but I am not a fan of TradingView. It's a very limited platform, and no matter how much control you have over it, it still has huge limitations. So, you know, to me, it's just not a serious piece of trading equipment. So, and then also the way the evals are, you know, clearly you have Lightning funded. That's always good. At TopStep, you only have back to funded, which I think is a terrible idea, because if you've blown up accounts, the last thing that you want to do is then pay an arm and a leg to reactivate that because you have bigger problems. And I've seen people go into a horrible amount of debt. There was somebody who was saying they would spend like $40,000 in a year because of back to funded. And I'm like, that's not right. It's like, that's a lot of cash to spend. It's the same product. So, you know, for me, there were just like certain things that limited me too much with what I was already doing as a trader. And because I'm already way too old to learn new stuff, and I don't like the platform, that was a little bit tricky for me, I'll be honest. It was very tricky for me. So personally, you know, I do feel that while TopStep are definite pioneers, and I always said they will always have a special place in my heart, I think they are kind of not really innovating much. The risk tools, they were great, but again, you have GAT, Guardian Angel Trader, which is a third-party risk system by a dude, one guy, who did an excellent job creating that. And it's like, you know, it's absolutely amazing. It's like, you can basically just set everything, all the rules, daily win, loss from peak, trading. You can lock yourself out. You can put allowed instruments, position size. And once you lock it out globally, you even have a possibility to effectively lock yourself out completely. So protections. You can protect GET files against deletion. What does that mean? It means if you go on tilt and you want to delete the folder with the risk system on there, it won't let you. And you can also lock it from being able to get removed, the whole Guardian Angel Trader. And you can also lock yourself out because you can just say, I don't want to trade this anymore, and you can lock out. So that's been there before TopStep X risk tools. Like, this guy has been around for a long time. So, you know, again, for me, this is a better tool because you can define the weekly lockout so that you don't touch it for the entire week. And not this like, oh, every day I have to remember to lock out risk. Like, that's not how a risk tool should be used, right? You need to have it lock you out for an entire week so that your brain gets it, like through my thick skull, that there is no more and you have to follow the rules. But if you have to do this extra step where you wake up, then you lock out your risk for the day, like, how many people are actually genuinely going to do that? And I can tell you, very few, because I tried to get them to do that in the VIP program, and there was only like 3 people out of the 50 who were doing it. So, you know, initially you have to have those shackles. You definitely have to have shackles that are preventing you from doing stupid things. And then your brain learns the limitations of how far you can push it. And once you have a limited amount of attempts on the day, then you start to think, you're like, okay, well, I can only have 5 trades. I better make them good ones, right? Rather than just click buttons until oblivion, until the account is gone. So yeah, for me, I'm so used to Ninja. It has third-party indicators. And from that point of view, any option where you can do bots and you can do Ninja will be always more preferable. So, and I will say it now, you know, I struggled a lot. And it is due to my age, it is due to me having a health condition as well, so not really, you know, having the full access to my brain. But, you know, you get to a point in life where you're just so set in your ways. Like, for example, if you look at Peter Brandt, right? He's been trading on white charts forever because that's just what he's used to. He's like in his 80s now or something. He's not suddenly going to go to like swanky black charts because somebody on the internet told him it looks better. He doesn't care, right? He will be like, listen, this is my chart. You don't want to look at it. It's your problem, not mine, you know. Or, you know, Dalton will be 86 this year, you know. He's not going to change the tools and the platforms that he's been using for probably 30 years just because there's like a new player on the block. Now, I'm not that old, right? But I'm old enough to not have that flexibility of switching platforms and being okay with it. So, you know. How many trades did I take today and how did I manage risk? 3 trades today. This is the 4th one. So I took 1 short CL. One of the bots took 1 long copper, then took profit, and then took another long copper. So that it recognized that there was yet another opportunity with the conditions that were existing at the time. And this is now a 4th one. So the risk management was 55 ticks on the first crude oil trade. Don't know what the risk was on the bot trade, I will be honest, because that is more structural. So whatever the candles were doing at the time, it uses the structure of the price action at the time to actually determine the stop loss. But usually it comes up to around 50 to 60 ticks of risk. And then the second one was similar. So I think that one, I did see that it did do like a 55 ticks maybe. And that was it. 1 full HG twice, 1 full crude oil once, and now we're in 5 MCLs. Why? Because it's a bigger stop loss. So it's a 75 tick stop. And we encased it. I always look at things, what if it doesn't work, right? So this is not the highest probability trade. I want you guys to have something on the screen to look at. But I also am thinking if this one loses, I want to maintain most of the profits that I've made today. So I'm only willing to risk about $375 on any future trade if I'm going to keep trading today. But we'll see, right? Right now, it is still fighting inside the developing value, but it's still underneath VWAP. And it's going to get jumpy into NYMEX. It's definitely going to get jumpy because we're in that time period right now. My loss limit for any funded accounts is 1.5K per account. But usually if the day is not going well, I will stop at about 900 per account. And yet when I do have pretty decent days, it's between 2.2K up to 2.5K. Although one of them did overshoot to 2.7, and I didn't really lose some on the day. However, that one is very nicely padded now, so that's no longer an issue. Did you know that on my Market Stalkers website, you now have 2 new additions that are more like utilities, because I find them useful and I couldn't find a good one. So we have the prop firm consistency calculator. Where you can basically put in whatever you want. And if you want to find those, they're at the bottom in the footer, right? And you can also have the risk reward calculator if you want to calculate how many ticks or pips you have. And, you know, it's like a little tiny, what'd you call it? You know, accuracy calculator. What's your risk per trade? Count capital. This is like 50K sort of thing. And I just wanted to have that on the website. And then if you go prop firm consistency, you can pick the size of your things. I should probably do a 300K here as well. You can change that. But, you know, to me, 300Ks are, they're not really suitable for most people because it's so aggressive on the target. So I usually go for either 100 or 150Ks. And then consistency rule, you have 50%, which is now Apex. You have 35 for the growth accounts. on Tradeify and you have 20% for Lightning funded, and then you can effectively put in whatever you need to see whether you can get the account balances to match whatever you need before you can either take a payout or pass the challenge. Utilities, that's what I'm here for. To create tools and utilities. Go over and queue, lol. Ugh, please don't. So yeah, I only took 3 trades for now, and it's banking me over 7 grand. You don't need to do 1 million trades, right? Not the way I do things, because I do things in a bit of a different way. Smaller size, more ticks, not the other way around. So I'm just checking that some of my bots here are switched off, because I've got like 2 accounts that are already over 2 grand. So I don't want them to trade anymore. Okay. All right. So far. Oh, you know what's missing here? My new candle timer. I was really annoyed with their candle timer, the native Ninja that's down here, and then it doesn't work. Like every time the connection disconnects, it just doesn't do it. So I decided to translate the same thing that we had in the other platform. So here it is. So 7 minutes, we'll know whether this has any merit or not. For now, they're just being really jumpy. Who do you think will win the World Cup? I have no idea. I'm not really into... Really not into... Is it football? I don't even know what it is. I assume it's football. We're at that time of the year and it's 2026, isn't it? So, yeah. Andrea says, I'm looking at previous day high as target buys in gold, waiting for an entry now. Yeah. Dan says, I knew time of day was important, but I didn't think the priority was that high. Yeah, for the way I trade, time of day is the first step. I know that's very unusual, but to me, time of day dictates the probabilities of the setup. So if the time of day is wrong, you're looking at an entirely different set of probabilities. Because, for example, post NY cut reversal, and Dan, you know, you've been on the VIP program. If it's happening, like let's say we're swiping Asia highs on gold. If it's happening around this time of the day, it's anyone's guess where it's going to go and whether it's going to give a reversal. But the closer you get to the euro close and that event happens, that has a really high probability. Like we're talking the difference between maybe 30% that it might work and 74%. And I'm not looking at like 3 months of sample size. I'm looking at the very least a year. But the post NY cut reversals I've been doing since 2013. And they are remarkably high probability. Like with it literally like staggering amount of times when they do happen. So without that extra sort of time of day component, you don't have the highest probability playbook on your hands. Jerry says, is it Jerry or Gary? I think it's Jerry because you have double R, right? You're saying, new here, hello from California. Really enjoyed listening to your experience in trading. I'm 10 months in. Still have people confused around me wondering why I'm trading. Ignore them. Ignore them, promise me. Because they have a different... There's this one meme that really resonated with me. wasn't even a meme. Like, it's not particularly funny or anything, but it's just a motivational sort of poster. I think it was maybe on my old Instagram. Let me see if I can find that, if it's still there. Rather than me looking on the internet forever and ever. Do have to scroll back a while. Yeah, no, can't find it. Okay, so let's see. Okay, so this is the one. Hold on. This will be just a grab from Google. So you have all the sheep going one way, and you have one person taking the road less traveled. That's what we're doing when we become traders, when we become business owners, when we become musicians, artists. We're basically choosing the more difficult path, while everybody else is like, you know, you do this because this is socially acceptable. And these guys, they're the ones who create disruptive technologies, who generally keep pushing until their dreams come true, and they will not give up, no matter what the people around you are saying, will say. Why? Because the other people who are telling you that are the part of these guys. So who do you want to be? Because if you're here, I'm guessing you want to be this person. The one who breaks from the mold and does something unusual that will inspire others at some point. But you can't give up. Is it an easy road? No. It is a road less traveled precisely because it is not easy. It is extraordinarily difficult. You will doubt yourself. You will hate yourself. You will think, I must be crazy for doing this. But don't give up, because giving up is the only way that you fail. If you don't give up, you don't fail. But you also have to improve. You can't just kind of turn up every day and go, well, somehow one day this is all going to click. No, you need to do everything in your power to make yourself good enough to do this. And nobody's going to do that for you. I can't do that for you. I can mentor you on the setups, probabilities, playbooks. But what I can't do is give you the conviction that you need to stick with it until it starts working, because there's no other option. So that's how my mind works. It's never like, oh, hey, you know, I suppose if this doesn't work out, I'm just going to go back to... No, I never had a plan B. It was either be a musician or be a trader. And then if that failed, I would probably be dead at that point, because I'd be so old from trying, right? There would be no other option. And that's the difference, right? All right, so now we're ending up in a pin bar. Some buyers have stepped in, but let's see if they can retest VWAP and then re-reject. We're giving it like plenty of room here. So really we would need to have like some massive piece of news that ceasefire is not on in order for them to like keep pushing. And again, this is where people get uncomfortable. They're like, oh my God, D, it's gone in minus 20 ticks. But it didn't go minus 20 ticks immediately. So this is the difference. If I enter a trade and it immediately drags minus 0.5 R against me, I will exit. This one went a little bit of profit, then it was scratched, then it went down, then it went up, then it went down, then up again. To me, that's acceptable, right? I will take the full risk and responsibility of $375 on this, because there's nothing happening right now. It's like, yeah, some buyers have stepped in, woohoo. But we're also getting to the fourth bullish bar, and statistically, usually you get about 4 bars on crude oil before it starts to reverse again. So it's not like, obviously you have days when it just keeps shooting up. Is it a directional day today? A little bit, but at the same time, we still have a full daily range to fill. So again, this is where I would be totally comfortable sitting in a trade like this until stop loss or until we bleed below 89. I couldn't be bothered. I don't care how it gets there, as long as it gets there. And as long as my stop is not like sitting at like 90 or 89, 95, because I wanted to skimp on stops. That's why we drop down to the micros, so that we can increase stops and leave it alone. But a lot of people, as soon as something drags against them because they're over leveraged up to their eyeballs, they're like, oh, but I can't take the risk. It's like, why can't you take the risk? Because it's too much. Yeah, so size the fuck down. Then you'll be able to handle the risk and not freak out and go, ah, 20 ticks against me. Ah. Does that make sense? The amount of times that people have seen me go into drawdown and freak out, it's like epic. They're like, oh my God, look at it. And I'm like, yeah, you look at it. So look at it 2 hours from now. That's the bit that matters. Not whether or not it went minus 20 ticks against me when I'm using a 75 tick stop. That's not even minus 0.5 R, right? Patience is the name of the game. All right, let me catch up on chat. Do I still do music? I do get this question a lot. So I did just release an old song of mine, but I don't really do music actively anymore. And the reason behind that is due to my health. A lot of people who have followed me here for a long time, you guys know that I suffered a pretty bad vaccine injury in the end of 2021. Since then, I've had something called myalgic encephalomyelitis, which has limited me, like it actually made me pretty disabled for about 3.5 years. Now I have some medications, it's called low-dose naltrexone, that has brought me back to functionality. I actually did just have a little bit of a fuck-up over the weekend. I had some social, then I came back home, and it was my sister-in-law who came to visit, and she brought a whole bunch of like old, moldy books. Now, the problem with my illness is that my body is basically stuck in an innate immune system. It's the part of your immune system that when something is attacking you, it makes you feel tired in the first 4 days. The difference is in those of us who are suffering from these like post-viral syndromes, then the innate immune system never switches off. So you're constantly like shuffling your energy into effectively a sieve, and that's why you feel tired. That's why you have odd disruptions to your entire autonomic nervous system. So LDN, low-dose naltrexone, has kept that at bay for the last 4 months. So I've been very functional for the 4 months. But because I inhaled some mold that was left in the house overnight, I woke up, and in the first sort of 3 hours on Sunday, my legs stopped working again. So I'm having a little bit of a wobble, a flare up with my health. However, thank goodness for makeup and for LDN, so I doubled my dosage. I feel better today. I should be back probably to normal by the end of the week. But because of that illness, I'm also light sensitive for the daylight, not the artificial light. Thank the Lord. Otherwise, I wouldn't be able to do my job. However, the light sensitivity also comes with noise sensitivity. So whenever I try to listen to music, it literally feels like somebody is like putting pins in my brain. It's like so uncomfortable. So I'm unable to do music at the moment. If I get more improvement over time, doing music might be something. But again, my voice has suffered as well. You can probably hear how strained it is compared to how it used to be. And that's a part of the illness, right? So I don't have full control over how my voice used to be, and it gets very, very fatigued very quickly. Again, we all have our own little, health problems to deal with, and it's just one of mine. I had extraordinary health and strength and fitness and athleticism for 41 years. Yes, I do have to deal with this right now, but hey, you never know. Maybe they'll come up with a cure. So again, me being delusional on a whole different level is also a product of why I'm a trader, why I was a musician, and why I am not letting this illness get to me. Otherwise, everybody else who's a little bit depressed, or, you have depressive tendencies, having this illness would probably make most people suicidal. But I'm like, no, I will get better. Like, I feel like shit today, but there will be a day when I will be... I don't care if I'm 60 or 70. If there is a cure someday, I will still be hopeful. I ain't giving up, guys. Like, there's no chance of that. So we push through no matter what. And that is what's required. That kind of, delusional optimism. That's what keeps me going in trading, in music, in illness, in everything, that there is always a way. And if there isn't a way, so be it. But by then, you're like so old that you don't really care. Am I now trading my own funds? I've never stopped. So I have 3 different accounts. One is corporate, one is sort of YOLO, and another one is options. I've traded that, never stopped trading it. But I love prop because it's a very low risk of entry to bump up the funds and to still have like emergency funds in case, like, let's say, something happens and I suddenly need like 10K. I don't want to take that out of the savings, or I don't want to take it out of the accounts, but I will take it out of prop. Why? Because I can always get more accounts and it's just easier. And in my opinion, you should do all of it. You should have the personal account. You should learn how to trade options. You should definitely get all of the prop funds that you possibly can. Maximize the potential for growing your wealth. Obviously not to a cost where you get 20 Apex accounts and now you're sitting at an upfront cost of like, what, 3.5, 4 grand, and yet you haven't proven to yourself that you have consistency. Don't do that. Okay? So start with one account, prove to yourself that you can maintain an account, hold on to it for longer than a month, and actually start getting regular payouts at the very least once a month. Doesn't have to be 50%, it can be 20, 30%, just so that you can slowly start covering your costs that you've invested into the prop. Once that happens for you, you can then use the prop funds to fund your account, your personal accounts. Most people are like trading with dollars in their eyes, and they're like, "Ooh, how many top step accounts should I buy?" 1. You should buy 1. That's the answer. Don't buy more, again, until you prove competence to yourself via payouts. If you received 1 payout a million moons ago and then nothing, that is not good enough. So you should still stay on 1 account. Once you start getting regular payouts, that's the time to scale up. So use whatever is around. Use whatever is around, but pay attention to where you are in your journey, because everybody's at a different spot. For me, you're seeing a culmination of me doing this for almost 20 years at this point, and I have a lot of knowledge. I have a lot of confidence in what I'm doing. I partially automated what I'm doing, but, I still want to use prop firms because this is a new thing for those of us who have been in the industry, right? Prop firms and sim funded thing wasn't really something that existed before COVID. And then all of a sudden somebody came up with sim funded payouts. And I was like, what sort of twilight zone did I just enter into? Where you can trade on a demo and get real money from it? It's like, what? That can't be right. Because the way it used to be, you get into a prop firm, you get, maybe there's an evaluation, but then you get one live account, a single one live account. And that's where the profits come from. But now it's like, no, just do sim funded, and then maybe we'll think of pushing you into live. It's like, great, give me all the funny money that you possibly can. Where do I sign up? Take my money. Because it's like such a low cost of entry, right? In order for you to fund your own account, you really, really need about 10 grand, right? If you want to do it properly. If you don't want to spend 10 grand because you're not sure what you're doing yet, hey, even the Lightning funded accounts in that perspective are super cheap. Because you pay like, $300-400 for it? That's still much cheaper than 10 grand. And not to mention the regular evaluations that you can pick up for $49 at Top Step, $62 at Trade Day, Apex, ultra cheap, right? $36, but you can't really beat that. So why would you then spend all of that cash and not try to see whether you're good enough to work under somebody else's rules and still make payouts? Once you do that, sky's your limit. All right, guys, we're going to finish it here. CG says I'm late to sell crude oil really early, and now I'm on another short. And yes, I will try and keep this going until probably about, let's say, another hour, maybe hour and a half. And if it's still alive, I'm going to take profits wherever it is. If the 89 is having trouble once NYMEX opens, I will take this off. But if not, and if they break through it, then there's really no reason why, negative gamma condition, which is what we're going to have at that point, why we shouldn't go to at least this ADR low. And so the ADR low is down here at 87.69, and my profit is just above that, below 88. But yeah, I am short crude oil, which is my favorite way to trade crude, being short. I hate being long crude. Anyways, that's going to be it for today. Join me again on Thursday, same time, 7 a.m. Eastern, 12 p.m. BST, which is the UK time, England time, for another round of the metal markets and a little bit of energies as well. So yeah, we'll see what the day brings. But if this trade works out, or if it doesn't work out, that will be probably it for me on the day. But yeah, hopefully my explanations of how I entered the crude oil and copper trade were good enough. If anything's unclear, you can always get in touch on Instagram, because I do have Market Stalker's Instagram page. Sometimes I post end-of-day P&Ls and then some setups that have led to that P&L. Might be educational, might be useful for you to see what the actual setup is, and then I usually do like pointers and stuff. Actually, I can probably show you what that looks like. I have it in highlights, so there's a little highlight section that says trading stuffs. Very grammatically correct. And it's not loading for some reason. That's great. But yeah, basically go on Market Stalkers. It's in one of these Nightbot chat messages. So click into that, go into trading stuffs, and then you will see what I post. But yeah. So I'm going to try and post more of that, but I will be honest, I'm a little bit shit when it comes to actually keeping up with my socials, because I just don't like it. You have to do extra work, and then you're like, oh, good, I have to annotate. But I will try. I promise I will try and be more active. Thank you so much for sharing your time with me. This was the Metal Markets. Enjoy COMEX and NYMEX sessions. Let's see what the day brings. And again, I will see you again Thursday. In the meantime, trade safe, watch out for headline risk, and I will see you all very soon. Enjoy my song Dirty Habit, which is a rock song that I made back in 2013, but it is now available to buy on Spotify if you are so inclined. I'm not going to push you with a stick though. That's all for me. Take care.